Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka. Well, we had a great start to the week. We saw the Nifty, Sensex, Nifty Bank, Nifty Mid Cap Index, all of these frontline indices hitting fresh record highs. But we saw the rupee sliding to a record low of 89.78 versus the dollar. That's something that kind of spoiled the mood, given the fact that we were digesting great set of macro data as well. But of course, that has also given rise to a few questions as to whether or not we could see a rate cut later this week or not. So lots of factors at play here. Uncertainty over a rate cut plus the sharp slide in rupee. That's something that weighed in on sentiment, which is why we are seeing the Nifty, in fact, the market retreating after hitting fresh record levels. So the Nifty, in fact, clocked in a fresh record high of 26,325 at the start, but retreated from that level. In fact, at the current juncture, we are sub 26,200 as well. In fact, we had even dropped below the 26,150 mark. In terms of the Nifty Bank Index as well, it's come off from the day's high, 300 odd points away after hitting that 60,000 mark for the first time. In fact, if you look at the breadth of the market, even that has turned negative. In the morning it was looking pretty good, and the breadth of the market has been a cause of concern any which ways, right? Because we've mentioned time and again that headline indices are sitting pretty at record levels, but portfolios have not really been feeling very enthusiastic, because some portfolios, some investors may have seen cuts of 30 to 40% when it comes to their portfolio, despite the fact that Indian markets, frontline indices are sitting pretty at record highs. But in terms of the other factors, let's take a look at some of the sectors that are doing well. We have seen November auto sales data trickling in. They have been pretty encouraging. The good part is that CV, commercial vehicle segment, had been a laggard, and that has picked up, and Vahan data had already indicated that we will see a demand uptick in CV segment as well, and that's exactly what has happened, barring a couple of names like Bajaj and Eicher, which have somewhat disappointed. Rest of the auto pack has done fairly well, be it passenger vehicles, be it two-wheelers, of course CV picking up as well. So yes, autos in the driver's seat today, top sectoral mover. You also have metals that are doing well. Some of the metal stocks like Hindustan Zinc, Hindustan Copper reacting to the fact that silver prices hitting record levels, copper prices hitting record levels. We've seen some stock specific moves because of that as well. What's not doing well? Real estate has been a laggard and continues to be the laggard, top sectoral laggard today. FMCG and pharma are among the other top drags in the market today. Quickly take a look at which are the individual movers then. Tata Motors passenger vehicles has raced to the top. The numbers came out, sales figures pretty encouraging, which is why we are seeing a 2% uptick. There you go. Tata Motors PV saw a 26% uptick in the auto sales figures, on a year-on-year basis. Top Nifty gainer, followed by Eicher Motors, Maruti Suzuki. These are some of the other names from the auto pack that are up and about. Bharat Electronics among the top gainers today. Some private sector names from the banking lot, the likes of Kotak Mahindra Bank, are upbeat. You have the likes of Eternal also doing well, Wipro, among gainers, Tech Mahindra among gainers, some of the IT names also doing well, HCL Tech also, by the way, among the top 5 gainers on the Nifty. Take a look at the likes of SBI Life, that's also among the gainers, although muted, moves, but still, nevertheless, they are trading in the green. On the flip side, Max Healthcare, that's the top laggard. That stock is down 3.5%. Interglobe Aviation, a close second, down 2%. Bajaj Finance, some of the pharma names, as I mentioned, pharma sector itself is under pressure. So Sun Pharma is under pressure. So is Apollo Hospital, Cipla, and the likes. But what's bucking the trend when it comes to pharma is Wockhardt. The stock really was on steroids. It was up 19% at one point in time, but some positive news flow in terms of US FDA. We'll talk about that in greater details later in the show. But that's one stock that's bucking the trend when it comes to the pharma pack. As we speak, the mid cap index is trying to edge back into the green. Some signs of green over there, but the rest of the market, although the cuts aren't very deep, flat, extremely flat on the headline indices, nevertheless sub those crucial levels of 26,200 on the Nifty. So that's all in all the texture of the market. But on that note, let me bring on board my guest for today. Joining me is Anand Rathi of Mira Money. Anand, lovely chatting with you this afternoon. First of all, we are perched at record levels, the Nifty, Sensex, Nifty Bank Index as well. But portfolios, as I mentioned, not looking all that great, right? That enthusiasm is really lacking. There is no euphoria, so to say, even though we have hit levels that we've never seen before. How are you really looking at the rally? What are you guys doing to navigate this leg, and what do you feel about the broader end of the markets which are yet to really participate?
Thank you. Yes, the enthusiasm is definitely on the lower side at this point in time, primarily because a lot of people have had higher allocations to mid and small cap as a sector, and few stocks which don't really or never really deserve the kind of valuation that they were at. And that's one of the reasons why a lot of clients' portfolio whom we don't manage are actually sitting at maybe 10% down levels or maybe 15% down levels or so, even though the market has actually made a new high. In general, what we believe is that one should be very very even at this point in time with small cap as a sector and a segment, because the valuations are high and the earnings are still not coming through. And that's one of the reasons why we have been very high on large caps and very little on mid caps and 0% on small cap. And I think there is definitely value even at this point in time investing in those sectors or segments, as we call it.
Okay, there's value in that. We had good macro data coming through on Friday. 8.2%, stunner when it comes to GDP data. Second quarter in a row when we've been, we've seen GDP data beating expectations, right? And on the other hand, we have record low inflation as well. Market is deeply divided. One section believes that we need another rate cut to support growth. We've seen that nominal growth hasn't been all that great, and for a few quarters it has been sub 10%, which doesn't bode well for corporates' earnings, etc. Which camp are you in? Do you believe that the RBI will go ahead and oblige with 25 basis point rate cut, or would you say that perhaps it would keep it for another day? When it would be the need of an hour to cut, need of the hour to cut rates. How will a rate cut be really justified at this level, given the fact that GDP has managed to beat expectations by a wide margin?
I don't think RBI will cut rates at this point in time. I think there is enough and more proof that the economy is looking like on a strong footing. And if you see, their commentary has always been to control inflation, which is well under control. They're also looking at GDP numbers looking very strong. So in my view, they may not use this ammunition at this point in time, and especially when the dollar is at all-time high against INR, primarily because a lot of these FIIs and FPIs will also look at carry. And if they cut the interest rates by 25 basis points, the carry will come down, which will again lead to more cash outflows or dollar outflows. And this could be bad news for importers. So I don't think RBI will use rate cut as a measure at this point in time, because if everything looks okay, maybe it will say, let me wait for another 2 months. Maybe I'll review the economy at that point in time. Inflation also will go back to 4% at some point in time. So I'll keep this ammunition well in my pocket and use it at a right time. So in my view, there is a very little probability of a rate cut, while I was in the other camp earlier. But I think there is enough and more liquidity in the system, which will lead to better rate translation. So I think they will hold on at least for this month.
Okay, they will hold on for this month. Of course, market is deeply divided. We'll have to wait till Friday to really discover what really happens on that front. But Rupee, that's been the big talking point today, and it's just it's not the first time that we've seen such a sharp slide in recent times, right? Just days ago, we saw a very sharp slide coming through on Rupee, and today again that has happened. What according to you led to that? Do you see any fundamental reasons behind that, or would you say that given the fact that RBI has said it will not really defend any level on the Rupee right now, do you think would that be a key reason behind this?
For sure, if the central government says I will let it go to the right value, which I think is about 91, 92. Rupee can slide a little further from here. And the other reason for the slide is also because there is still uncertainty around US tariffs on India. So till the time that sword is on our head, I think Rupee will be under stress for some more time. This is not an abnormal. I don't see this as an abnormal trend. We have seen it in the past. I've analyzed 20 years of data. Yes, there are years where it doesn't really go down, but on an average, it always goes down by about 3.5%. I'm talking about INR depreciation against USD. This time around, it is close to about 4.8, 4.7%. Maybe next year it will again average out. So net, this is not an aberration. This is a fundamentally, moving. I mean, there's a reason behind this fundamental move. And if RBI doesn't support, I think it can well go down to about 90, 91 also, which is not be a big surprise. Will support the exporters, but of course affect the importers, especially the gold importers, which RBI also wants, because if as a country we keep importing a lot of gold, I think that also leads to a lot of CAD, which we already saw in October. And therefore, RBI's decision was right, that I will not intervene and let it go to 1991 is what my belief is.
All right, 1991, no surprises if the currency falls to that level. But while constructing portfolios, how should one look at this development? Which are the export-oriented themes you like? And given the fact that we've also gotten signals that India-US trade deal could come through this month, of course, being year-end, it is expected to come in this year itself. So, in the run up to that, any export oriented themes that would feature high on your list?
Not really export oriented. I would say, a decent part of your portfolio, maybe 20%, can be in international countries. That's one of the ways to hedge your portfolio. I'm not a big believer in gold, because the more you import, the more the deficit increases. And the more deficit increases, it leads to more depreciation of the INR. So net, we are causing the fire for depreciation, in my opinion. But then if you want to geographically diversify and also focus a little more on countries outside of India, I think that's a better theme than primarily looking at export-oriented sectors and participating in those stocks that will be benefited. US trade deal, we've been talking about it. I'm clear till the time it happens, it happens. Otherwise, we are not counting on that as one of the triggers for buying a certain sector or a stock. Global diversification is a lot better than buying an export-oriented sector, in my view.
Okay, global diversification, more prudent than buying into export-oriented themes. But let's talk about domestic themes as well. Auto sales figures have come out, and they've been fairly healthy, and Vahan data had already indicated that as well. One end of the spectrum, that's the CV segment, was in reverse gear, but that has picked up speed, and that's heartening, right? So, which end of the spectrum would you look at when looking at the entire auto universe? Would you tilt towards CV makers, or would you see two-wheeler makers, or how would you really be positioned when it comes to the auto basket?
In general, it is better to be diversified at this point in time and go actually heavyweight on auto, because our view is that the trend of premiumization is there, especially when it comes to auto. So if you want to really focus a bit more on auto, maybe those kind of companies which manufacture a slightly more premium vehicles, both on the commercial and on the passenger side, looks good. Plus, any two-wheeler company that focuses a lot on EV as a theme, I think those are the kind of sectors that will get immensely benefited going forward. Yes, you're right. It is very heartening to see auto sales continuing to go up despite festive season being over, and this reflects well on the economy, and that's one of the reasons why our economy may be clocking a number of 8.2% plus. So my view is diversification, a little more on premium vehicles is better than looking at the regular ones that don't really offer you premiumizations.
Okay, premium segment, that's what one should really look at according to Anand. But Anand, want to get in your thoughts on this whole cigarette makers, given the fact that the government is going to replace the compensation cess with a new levy of 70% or higher on tobacco and tobacco related products. Now, Finance Minister has tabled the new cess bill in the Parliament. How does this get integrated into the GST ecosystem? How does this impact the cigarette makers, and will it really impact the end users in any way? I mean, what is your read through of this entire thing, and how does it really impact the entire ecosystem? Just want to get in your thoughts on that.
If you actually see, the companies that are manufacturers of cigarettes are the ones that continue to show top line growth despite literally every year the cess, the taxes on them have increased. So yes, this is yet another new way of taxing or at least penalizing using sin tax or tobacco or whatever cess that you name it. But in my view, this may not really lead to sales volume coming down. In general, their distribution is very strong. In general, we have seen that people don't really give up because the incremental number between single cigarette to is maybe a rupee or two, which really doesn't affect the pockets of the consumer. So in my view, yes, in the shorter term, there can be some headwinds to the stock, but in the medium to longer run, I think if they continue to show sales growth, which I think they will, I think the stock per se will perform a lot better in the medium to longer term also. Short term, definitely this will act like a headwind, especially for the companies that are in the tobacco space.
But would you look at stocks on this universe?
I mean, we don't do stocks, so I mean, it's up to the fund manager for us to decide. In general, I mean, as I said, I've not been too negative on them. They have grown despite all the cess and the taxes and the penalization that they have seen. So I don't really have a negative view on them. Am I positive? I'm not sure, but not very negative on them.
Okay, all right, got your point. And we've had a fairly good earning season, more upgrades than downgrades. What have been the three clear winners for you from this second quarter earning season, which have the potential to do much better in the second half of FY26?
My favorite continues to be auto and definitely banks. We've been liking banks for multiple reasons, and one of the good things about maybe a rate cut being postponed, if at all it happens, is that the NIMs of a lot of these banks will continue to be healthy, and I think that will be a big boost up for banking stocks. So these are the two primary sectors that we think will be benefited going forward. And other thing being consumer discretionary. We are not so much positive on FMCG, but we believe that a lot of discretionary spending will happen, and this consumer discretionary space is one of the sectors that one should focus on. So any fund that invests in auto, that invests in CDs, that invest in banks are something that we are asking our investors to go a little high on. And I'm especially positive more on the banks. If there is no rate cut, I'm pretty sure that banking sector, which has already performed very well this year, will continue to do well going forward also.
So would you be talking about private banks or PSU banks? PSU banks, of course, a lot is happening, a lot is underway, a lot is being thought out by the government in terms of consolidation, increasing FI limit, etc. So which end of the spectrum would you tilt towards?
I like PSU banks more than private banks, especially because of valuations. Yes, government is doing a lot to consolidations and all the ownership changes and all this stuff, which will also lead to better quality management, especially for public sector banks. So I'm more positive on them. But even in the private sector bank, there are few laggards that are there. The valuations look comfortable in those spaces. So maybe one can have a healthy mix, but more tilt towards public sector than private sector banks at this point in time. But on a whole, if you're investing in a sector, I think banks should be one of the sectors that should grab a sizable portion of your portfolio.
Okay, bank should grab a sizable portion of your portfolio. A lot more questions left, but lack of time. Anand, would like to thank you here, but look forward to interacting again sometime in future, perhaps before the start of the next year, and we'll have a deeper discussion at that point in time. But thanks a lot for taking out time this afternoon and joining in. Always a pleasure.
Thank you.
On that note, let's take a look at what the markets are doing. We're just about 7 minutes away from the market close, from the closing bell, so to say. 26,176, extremely flat. Look at the mid cap index as well, completely flattened out. The breadth remains skewed in favor of declines, and the bank Nifty just below that, 59,700 mark. So we've come off over 300 points from the day's high on the Nifty Bank Index, 60,100. In fact, it crossed that level, but we've come off quite significantly from there. Of course, quite a few factors at play. Rupee hitting record lows, kind of spoiled the mood just a bit. We had a strong start to the week and day and month as well, but things cooling off just a bit. Just want to point out some of the movers and shakers from the broader end of the markets on the Nifty 500 index. The top gainers include the likes of Wokhard. Now, of course, there's been a development. Wokhard is up 20% as we speak, by the way. So yes, big development there. We'll talk about it in just a bit, with the technical analyst who will be joining us in a while from now. JM Financial, that is another one that's gaining on the back of strong volumes as well. That stock is up 6%. You have IEX, that's also up somewhere around 5.5%, and Tejas Networks has received some payout under the PLI scheme. That stock is also up somewhere around 4% or thereabouts. On that note, let me bring on board our chartist for this afternoon, Rajesh Bhosle, Senior Technical and Derivative Analyst at Angel One. We'll talk about the index in just a bit. Rajesh, just about 5 minutes to go. Any BTST strategies from you?
Stock specific momentum we are witnessing. So one can buy 1 minute. Yeah, one can buy PB Fintech. We are seeing a very strong breakout in PB Fintech that can be bought. It is trading around 1864 with a stop loss of 1810. One can buy for a targets of 1960. The second buy call is on MFSL Max Financials. So November month ended with a strong flag pattern, and in the last 1 hour we are seeing strong surge in MFSL. So with a stop loss of 1670, MFSL can be bought in the near term. We expect 1790, possibly in the coming session itself. We expect strong momentum.
Okay, that's those are the BTST strategies, PB Fintech and MMFSL from Rajesh Bhosle. But Rajesh, let's talk about the market then. We've completely flattened out. We hit record levels. What would you be doing with the market in the market tomorrow? Of course, we just have about 4 minutes to go for markets to shut. But next key levels to watch, and what would you be really doing tomorrow?
We would continue with our recent approach of buy on dip. If we consider last Wednesday, there was a strong breakout leading Nifty to all-time high levels. And post that, if we can see last 3 session has been more of a consolidation around the higher end of this Wednesday's bullish candle. So this consolidation is more mainly because the indicators are overbought and traders are a bit cautious around the all-time high level. So bias is positive. Consider dip as a buying opportunity. On the lower side, if we see 26,050 to 26,100 is a very strong buying zone. And if we consider last week low, it coincides with 20 EMA and the previous week's low. So 25,850 remains a sacrosanct level. And as long any dip towards 26,100 can be bought. On the high side, 26,300 to 26,400 is acting as an immediate resistance. One can look to book a mild profit around those levels.
Okay, that's the view, and those are the levels to keep an eye out on. It's a crucial week, Rajesh. We have the RBI policy on Friday. How would you be positioned when it comes to the rate sensitives, including banks, autos? Autos saw good traction after the strong November sales data. Banks, of course, hit a fresh high today, but real estate not firing up at all. So within the rate sensitive basket, how would you be positioned ahead of the big event on Friday?
So if you see two space auto and reality, they have I mean they are in divergence mode where Nifty and key indices are trading at all-time high levels. reality has not performed well. In fact, last 2 weeks, the weakness has been extended. So we would wait for some kind of base formation or some kind of reversal in reality space, and then we will look to enter. But as of now, we'll avoid catching the falling knife. Having said that, definitely auto space has been the pick since last 2 3 weeks, and we expect this outperformance to continue. From the auto space, if we see TVS Motor from the two-wheeler basket, Hero Moto, and from the four-wheeler, we are bullish on M&M. Even if we consider from the recent week counter, Tata Motors passenger vehicle, that that is showing some reversal in today's session. So this counter as well looks positive in the near term. So auto definitely are the pick from for the near term.
All right, autos would be the pick for the near term. Just about 10 odd seconds to go for the markets to shut. Before that, I want to ask you, what do you make of the breakout move on shares of Wokhart? 20% up. It has got the US FDA nod for a new drug application, antibiotic Xenic. It has of course been granted fast track designation by US FDA. We'll come to the market close in just a bit, but talk about Wokhart. How does it look on the charts? A breakout move, how much more upside from here?
So, if we see a similar kind of move was witnessed in last 2 months during October and November, but the rally didn't sustain. But today we are seeing that the counter is finally closing above its 89 DMA, whereas previously that was acting as a resistance in kind in case of any upset. So that key hurdle has been crossed. So prices are about 289 EMA. So now we are seeing a rounding bottom formation on Wokhart. Possibly this up move can extend. We are expecting levels of around 1585. That is its September swing high. And once that is crossed, then possibly 1850 can also be expected. So the counter is in strong momentum. Maintain your positive bias. If in case there is a mild dip towards its breakout levels of around 1430, that would be a buying opportunity. So for the 1430 is a buying opportunity, and move towards 1580 is what we are expecting for the coming session.
Okay, those are the levels to watch out for on a Wokhart. Just take stock of the market close, the mid cap index just managing to end in the green marginally so. Uh, but otherwise benchmarks have completely flattened out after hitting record levels. Nifty sub 26,200, it ended at 26,175. The Sensex just a shade below that 85,650 mark. Bank Nifty down 71 points. It had cleared that 60,000 mark, hit a fresh record high, but did really fizzle out with the rest of the market. Of course, we saw that sharp fall in Rupee to I think 89.78. That's something that spoiled the mood, and we saw stocks coming off their days highs as well. In terms of sectors, autos took the lead today in the driver's seat, given the fact that auto sales numbers were pretty healthy, and the likes of Maruti, Tata Motors, PV, these were among the top gainers on the index. Metals also did well, up 0.5%. We had the likes of Hindustan Zinc, Hindustan Copper doing well. Silver prices hitting record, copper prices hitting record. So we had reactions from that, and Hindustan Copper, that was the top gainer on the Nifty Metal Index as well. IT index did well, up 0.5%, but what didn't do well, realty, pharma, FMCG, these were some of the other sectoral laggards. In terms of the large cap movers, as I mentioned, Tata Motors, PV, that's the top Nifty gainer. BEL, Maruti, HCL Tech, Kotak Mahindra Bank, these are some of the other movers. On the flip side, Max Health, Interglobe, Bajaj Finance, Sun Pharma, Trent, Tata Consumer, these were some of the other laggards. Even SBI was among the laggards today, and so was HDFC Bank. But let's talk about some of these metal names. Hindustan Zinc, Hindustan Copper, respective metals hitting record levels. How would you trade into these counters? Do you spot a trade, or would you look at them as positional plays, or would you say that they are running up quite a bit, wait for some cool off before entering?
So both the counter Hindustan Zinc and Hindustan Copper, we are seeing a significant volume traction. So expect this performance to continue. Possibly, if we see Hindustan Copper, it has broken above its 50 EMA, which was acting as a resistance last few weeks. And with this breakout, we are expecting prices to retest the levels of around 365. But one has to keep a strict stop loss on this space because it's a very volatile space. So on the lower side, if we see 320 seems to be a strong higher bottom on the intraday chart. So 320 would be the support and 360 would be the immediate target in the near term. The second counter, if we see Hindustan Zinc, we saw strong bullish gap, a trend line breakout, and possibly the stock is headed towards its recent high 520. Today's bullish gap around 488 is likely to act as a support. Any kind of dip towards it can be bought, and in the near term, expecting targets of around 520.
Okay, expect targets of 520 on Hindustan Zinc going forward. But let's talk about some of the other volume buzzers. JM Financial, the stock gained in 4 out of the last 5 sessions. Volumes were highest in the last 4 months. The stock did see some signs of cooling off if you look at the last 1 month chart. But with today's move, would you expect a resumption in the up move, or is it just a one day kind of, not exactly a 1 day or 1 week kind of a move?
Also, if we classically see the price movement, it has precisely taken support on its 200 DMA, and I mean we are seeing a open low Marubozu candle on the daily chart. So back with strong volumes, we expect yes this performance can extend in the near term. Possibly 170 to 175 can be expected, which is its 89 EMA. And yes, any kind of dip towards 148, 145 would be a buying area. So yeah, buy on dip would be suggested.
Okay, buy on dip when it comes to GM Financial. Last couple of stocks then. What about IEX? Did well to rebound after Friday's fall. It was among the top FNO gainers today. Any thoughts? How would you trade into this?
So a very short-term targets, because if we see in the month of July and August, there was a sharp crack in this counter from the levels of 210 to 130. So overall, the momentum remains weak. In the short term, yes, definitely the stock is poised for some up move. So one can expect levels of around 152 to 155, and on the lower side, 139 is the support. So one can have a view of a trading bounce, but apart from that, higher time frame still looks negative.
Time frame, IEX still, the setup on IEX charts still look negative. So keep tight targets and stop losses. But talk about some of your recommendations then, Rajesh. Any recommendations for viewers?
As earlier highlighted, two counters very bullish on them. One counter is MFSL. If we see the November month ended with a flag pattern breakout, the stock is in a strong uptrend. Any dip towards 20 EMA is getting bought into. And in fact, if we see last 1 hour, there was a strong surge in prices. So MFSL, we are expecting strong up move in the near term. Even in tomorrow's session, we are expecting positive traction. So with a stop loss of 1670, MFSL can be bought. 1790 would be the immediate target. The second buy call would be on Policy Bazaar, PB Fintech. If we see the stock, I mean, despite lackluster market, it was up more than 2.5%. Strong traction, cup and handle pattern breakout, backed by volumes. So PB Fintech can be bought with a stop loss of 1810, and 1960 would be the near term targets.
Sure. Of course, those were also your BTST picks, PB Fintech and MMFSL. But I would like to thank you for taking out time and joining in this afternoon, Rajesh. Look forward to more interactions going forward. Of course, we will watch out for levels of 26,100 on the downside and 26,320, 325 on the upside. That was the swing high and the record high level on the Nifty. But with that, thanks a lot for joining in. Well, on that note, let me bring on board my colleague Yatin Mota joining in. Yatin, we started off in style, so to say, right? Nifty hitting record highs, Bank Nifty 60,000, even mid cap index hitting record highs. But I think it was the spoiler, the rupee fall, sharp slide that really led to some disappointment. Also, the fact that although GDP figures have been so strong, now there's a question mark arising as to whether or not there's a rate cut coming or not.
That is exactly why I think the rupee also gave up, and I think the markets also saw some slight profit taking because the GDP numbers were excessively better than expectation. Now, does the RBI consider this as a one-off because we had the GST cut plus the festive season, which has boosted the sales and the growth, obviously. Across sectors, especially autos and real estate, gems, jewelry. So whether or not that is one-time factor which the RBI considers, or RBI probably thinks that the GDP deflator is so low that probably we need some inflation, some animal spirit back on the growth front. So they are lenient and they do a rate cut. So yes, I think the RBI will decide, and the RBI decision probably will influence the market from here on. We also have President Putin also coming later this week. A lot of defense deals on the table. That is also one concern point, as in how does US react to this? Because we still have to make a trade deal with the them. US markets and President Trump. So yes, all of these geopolitical stroke macroeconomic things are now taking over the market in terms of reaction.
Yeah, I think which is why we saw markets completely flattened out end of the day. No big cuts, but nevertheless we ended off the day's high and off record levels as well. But Yatin, quite a few movers. The mid cap index was trying to edge back into the green. Didn't really happen. But anything that caught your attention, stock specific in the market today?
So let's talk about Wookhardt. That is one stock which saw some price action on the back of US FDA NDA filing. We had IEX GM Financial doing well. However, stocks like Whirlpool, that stock slipped below that 1,000 mark to hit a fresh 52-week low. So clearly things not looking good for Whirlpool at this point in time. Newland Laboratories, KPR Mills, Welspun Living were the other stocks which saw some bit of profit taking. So textiles as such, and probably few of these exporters are facing some bit of selling pressure.
All right, those were some of the movers and shakers. Of course, Whirlpool saw that stake sale by promoters and them also saying that they will further reduce stake. I think that's why the stock under pressure. But let's talk about some of the stocks that are on our radar this afternoon. Of course, how can we not touch upon auto sales? Numbers have been fairly healthy, which is why I think we saw autos in the driver's seat today, even though markets were weak. Autos were leading from the front, top sectoral gainers up almost 0.7%, the entire auto index. Even Tata Motors, passenger vehicles, Maruti, those were the top gainers. But overall, the trend is that, one end of the spectrum that was lagging, CV sales, that saw a healthy pickup, and that was, I think, already indicated by the Vahan data, and that really took shape as well. PV sales have been healthy. Two-wheeler sales have been great. Tractor sales have also been, great, in excess of 30% for some companies. So what's really lagged in the two-wheeler universe is Bajaj Auto, some bit of drag in the domestic business that declined 1%, so that was one negative. And secondly, Royal Enfield sales were also not really up to the mark. They disappointed a bit. Some bit of demand pain when it comes to the above 350cc motorcycles, but below 350cc saw good demand. So let's take you through what really what the kind of numbers are for some of these companies. For M&M, auto sales was steady. They were up 19%. SUV sales jumped 22%. What stood out was the tractor sales. It was it gained in excess of 30% on a year-on-year basis. CV sales were in high double digits at 17% year on year, and you can see that in Ashok Leyland as well. There as well, tractor sales were strong. They came up to they grew 29%. I think expectations were somewhere around 20 to 22%, but they have grown almost 30%. Domestic sales for Ashok Leyland was up somewhere around 32% or thereabouts. In terms of two-wheelers, TVS Motor was a big beat. That stock was up 3.5% today, 30% total sales jump. Two-wheeler sales were up 27%. EV sales also saw a very strong uptick, almost 50% on a year-on-year basis. And if you look at the international sales, that was up somewhere around 58% or thereabouts on a year-on-year basis. For Bajaj Auto, as I mentioned, okay set of numbers, and that was because domestic sales, saw some bit of a drag. They declined 1% year on year. Three-wheeler sales jumped somewhere around 37%, and exports growth was healthy for Bajaj Auto at 14%. The table will also come up for you on the screen. For Tata Motors PV, the passenger vehicles segment, it was a beat. Total sales up in excess of 25%. EV sales grew in excess of 50% on a year-on-year basis. And even Tata Motors CV, that saw a very healthy jump, 30% almost. And international business sales were up somewhere around 92%. For Eicher Motors VECV as well, 37% jump on sales. But as I mentioned, Royal Enfield was in a spot of bother because of some bit of demand pain in the above 350cc motorcycles. Maruti again, a good set of numbers. Sales were up 26%. But for Maruti, the standout was the fact that entry level segment did well. Alto, S-Cross, Espresso, I beg your pardon. These accounted for sales which grew somewhere around 27%. The entry level segment that was lagging behind, but that also played catch up, 27%. And if you look at Hyundai, that was up 9% or so. I mean, no double-digit gains there, but the expectations were somewhere around 5 to 6%. It's managed to better that. So that's the table coming up on your screens. That's how the picture looks like. So all in all, healthy sales data for auto segment, which is why we saw a good traction in auto names.
Yes, and that beautiful plate coming on your screens showing, the average growth rate was, more than 30% in the case of commercial vehicle players and two-wheeler players. So no, negative surprises for auto companies. In fact, commercial vehicle sales and two-wheeler sales have surprised on the positive side. Four-wheeler sales has been, as per expectations, but still strong. So the likes of Maruti, Hyundai Motors, M&M automotive segment, all of them have posted strong numbers, and hence we saw some momentum post the numbers in few of these auto stocks.
Sure. From autos, let's set our sights on Lenskart.
Yeah.
It reported first numbers after listing, and numbers are pretty good. I think the stock also saw good gains today. So Yatin, take us through what really caught your attention.
So you look at Lenskart, 20% sales growth, 15% same store sales growth, and the best part about the numbers was the margin expansion. Not only the margin expanded QOQ, but we saw big bump up coming on a year-on-year basis. Margins inching up very close to that 20% mark. Last quarter, this number was 18.5%. Last year, this number was around 16-17%. So no complaints. Quite strong numbers operationally, which has boosted the profitability obviously, and the same store sales growth also has been on a very high note. Probably, brokerages are also impressed by the numbers. Jefferies has already come out with an initiating note last week, wherein the target was nearly 500 rupees, and the stock reacting positively to the numbers was up 4% last time I checked.
That's true, Yatin. And Jefferies also pointed out when they initiated coverage that the market share is only 5%, and that's why they have a huge runway for growth going forward. And with these numbers, might be instilling confidence in investors who were, a little iffy when it comes to valuations. That's been a talking point when it comes to the recent spate of IPOs. But the big showstopper of the day, Wockhardt, up 20%. That's because US FDA accepted its new drug application for the breakthrough antibiotic Xenic. I think this is the historic moment for Indian pharma, because this is the first time that the US FDA has accepted an NDA for a new chemical entity developed by an Indian company. This is not an approval. This is just them accepting this NDA, and they will of course go through it and then give their approval. So I think the street really got excited given the fact that it's the first time that US FDA has actually accepted such a new drug application. But let's see whether the stock really moves as much when the final approval comes through. But this application was filed on the 30th of September. If you look at the Xenic antibiotic, it's aimed at tackling resistant bacterial infections, an area where global innovation has been limited. I think that's another thing that sets this whole development apart. Now, the company has said that it remains committed to advancing Xenic through the regulatory process with the goal of bringing a new antibacterial solution to global markets. Now, analysts believe that there is a 90% chance of the company winning an approval for this. And Systematic, an analyst from Systematics was on CNBC TV 18. I was just listening to the interview, and he was saying that the global market size of Xenic is around $1.5 billion, and Wockhardt will be a patent holder for Xenic in the US. Now, Xenic could potentially be a $500 million product for Wockhardt. So, substantial contribution it could make to Wockhardt's top line growth once the approval really comes through. But yes, nevertheless, a landmark moment for Indian pharma. Once the approval comes through, then of course we will see how the street reacts. But for today, 20% up move. Absolutely. And a blockbuster move, and stock of the day, Wockhardt for you.
Absolutely, and I think Dr. Korakiwala has been quite gung-ho about this new antibiotic. It helps patients who are recovering in hospital, which usually suffer with bacterial infections. So I think this drug and its complexities have proved that in pharma companies with R&D capabilities are able to address even one of the toughest diseases and bacterial infections with ease. This particular drug probably is said to be a big blockbuster in the history of Wockhardt Pharma.
All right, of course, blockbuster moves coming in on the stock prices of Wockhardt. Well, all in all, to sum it up, we started with a bang but ended with a whimper. That's the market action for today. But let's see how things really pan out. I think we will be cautious throughout the week until and unless we get the RBI decision, which comes on Friday. So we are counting down to that, and a deeply divided street. Let's see what really happens on Friday. We'll of course be getting you a live coverage of that, and lots of developments lined up throughout the week. As Yatin pointed out, Russian president will be in the country as well, so we will be watching out for cues from there in terms of what kind of defense deals we manage to ink. So defense will be another pocket that will be in focus as well. But with that, completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates, and we'll see you tomorrow with the markets again at 9 a.m. Thank you. Have a great evening.